name is Steve Peterson. I'm the broker and owner of Infinity Investments. Infinity Investments is a commercial real estate brokerage and investment firm. We specialize in the acquisition, management, and sales of apartment buildings. We do other real estate, of course, but our focus is multifamily apartment buildings. That's anything from a duplex to a fourplex to an 80-unit to a 100-unit property. That's our focus, that's our niche. When we do residential, Deborah's invested with us. We're doing a residential flip right now. Laverne, you've invested here with into this property here. I'm very appreciative. Steve and I are getting ready to do some things. Steve's got an 18-unit in Berkeley, a 6-unit in Oakland as well. So we're ramping up, getting ready to do some things. I wanted to mention that to you guys because to let you know that this group is a real group. It's a real business. So we're not just sitting here talking philosophy, which we are, but we're actually practicing what we preach, and that's critical. Because like Matthew said, you're not going to be able to depend on Social Security. You're probably not going to be able to depend on your IRA and pension plan as it was previously set up. So you have to take some sort of action now to set that up. So that's why these meetings are important. A little bit about, introduce myself, a little bit about Infinity Investments. We started the company in November 2009. I don't know if you guys remember 2009. That was one of the crazier years of my life. I started real estate in 2003. From 2003 to 2007, it was a party. Everybody was closing deals. I remember going to a couple of different parties where 80 to 90% of the people were either real estate agents or real estate loan brokers. Because at that time, the market was rolling so much, there were so many people involved, and money was so loose that everybody was involved. Unfortunately, well, I guess fortunately and unfortunately, the market jumped off a cliff. Unfortunate part about that, a lot of people lost a lot of money, a lot of people lost a lot of property. The fortunate thing about that, and that's why I think we're going to some of the properties that we're involved in today, the very fortunate thing about that is prices came down to reality. And in some places, they went below reality, below where they should be, what people can actually afford. So we were living in this bubble for a few years based on 100% financing, no doc, no qualifying. So money was free, so the prices just kept shooting up. It was inflated, it wasn't real. And so when the market jumped off, prices came down so far, it's created probably one of the best investment opportunities in history, period. No matter what you're investing in, whether it's single family, multifamily, office building, retail space, whatever. Because of that crash, it's created a tremendous amount of opportunity. And so it's up to us to take advantage of that because it's a very, very competitive marketplace. Even though prices are down, people with cash are out there and they're buying the property. So it's imperative for us, whether we do have a lot of cash, we don't have any cash. You don't need cash to invest. What you need is a plan. And so that's what we're going to talk about, how to evaluate your plan and how to evaluate property. First thing let's start off with is product type, right? Okay, within real estate, there are a variety of different product types. First thing most people think about when you think about real estate is a single family house. That's the most common piece of real estate in the world, single family home development. But there's many types of real estate. Obviously condos, townhomes, 2 to 4 units. Those are classified as residential income. 5+ units. The difference between 2 to 4 and 5+ is that 5+ is now commercial property. That's multifamily commercial. The big difference between 2 to 4 units and 5+ is the financing. When you got 5+, you have to get a commercial loan. When you're 2 to 4, you can still get a residential loan. And in fact, you can get an FHA loan. Also within that, you got retail property. The property you sit in is a retail property. Now we use it as an office. This is our office. But it's actually retail property. And the front, we have this space and we have 2 rental units in the front. And most likely the tenant that's going to go in there is some sort of retail tenant, some sort of tenant that's going to be selling goods on a daily basis. But then there's office property, industrial is warehouse property, R&D, research and development. Also hospitality, hotels, motels, single room occupancy properties. This is the main category. There's probably a list of 10 other categories of real estate. So I bring this up because it's important to know what you're dealing with. The rules, the laws, the way of business for a single family home, completely different for a complex, completely different for a 20-unit building, which is absolutely different from a 100,000 square foot high rise. Things are different. The one thing that's constant in any real estate investment is cash flow.